Ladies and gentlemen, Keiki here. Welcome to the daily update. Hope you guys had a good day trading today. Market is down 1% there on the S&P. Nasdaq down about same, along with the semiconductor Dow, Russell 2000, transport. All of these guys are down about 1%, a little more. Banks got hit today, 2% negative. Energy down 1.2%. Biotech same. Healthcare down a little bit. Home builders also down about 2.3%. Only green print today on the equities. You can see that utilities is printing slightly green there. Retail down 2.9%. Emerging market down 1.5%. Bitcoin flat. Gold, silver, miners holding up well today. They're only down about half a percentage. Dollar flat pretty much. Oil down and treasury bond down. VIX popped a little bit. Let's look at S&P 500 ETF. Spider. 65-minute chart here. So this is where we closed on Friday. And we opened up here. So we gapped down. And you can see on the Friday morning's gap down right here, bulls were not able to fill the entirety of that down gap. So they left some of it on Friday. And with that, there's that weakness came about. And then today you can see that follow through secondary down gap. So we have two down gaps that are open. So with that, there's a lot of buying or selling pressure here last couple or several trading sessions. As long as these down gaps open, bears are going to make bulls' life miserable. It looks like we did find some support here on the second hour, right on the long-term moving average. And then a third, fourth, fifth, sixth, we made a little bit of attempt to see that rally. But let's kind of zoom out here a little bit. And you can see that my short-term moving average is right here, my mid-term moving average in that vicinity. And the short-term moving average continues to, favor the bears since Friday right here. And bulls were able to kind of capture that short-term moving average to the upside. But then when we saw that gap down, things changed, breaking below that short-term moving average. Let's kind of zoom out here a little bit. We'll get a better picture. So as you can see, if I zoom out a little bit, right now, bears are working with these two down gaps. That's going to be bears' weapon for this entire week. So if you're a bear, you're a seller, you want to see much lower prices. You've been getting burned by this market, so you really hate this market. You really want this market to tank. You make sure these gaps are protected and not get filled, because if bulls fill these gaps, they will make a way back to the upside. But bulls right now, what they're working with, obviously bulls are, overall like a long term and the midterm, it favors the buyers. In the short term and the micro term, things have been pretty hectic right here. As you can see, in the entire month of December, just been a lot of hecticness, a lot of up and down, a lot of shenanigans. And I think a lot of people who are, looking for the Santa rally, well, getting churned back and forth and up and down and sideways, some crazy shenanigans here. So as we're entering into this Christmas week this week, buyers are wondering, are we ever going to see that Santa this week? Well, here's just only one option. If you really want to see that Santa this week, or maybe even, next week, there's one way, only one way bulls can make it happen is gapping it above. All right, this is it. This is the only way. Gapping it above 460 and make this into an island bottom, right? And let's say this thing gaps up and go up and fill this gap, pull back a little bit. If we see something like that, that's a good there's a good chance that we may even see new all-time highs before this year ends. But that's kind of low probability setup at this point, I think. But because we're in an overall uptrend, the odds are a little bit better, I think, in this time around. But it's difficult to say as of today. Until we actually see that gap up. It can't be a gap up to here or here. It has to gap up above the gap area right here, which is, what is that? 450. It's a 460, 4610. Not only that, I think it's better if we gap above my midterm moving average and the short-term moving average. So it must gap above like 461. And how big of the gap that would be. So from here, we close right here. Yeah, there has to be like a 1.3% gap up. At least minimum more than 1% gap up to make that work. That will be the only way to make this transition as smooth as possible, because these down gaps will make things hectic. Even if the bulls, get up here, right? And if they go up and fill this gap, well, that gap fill is going to act as resistance. That midterm moving average, resistance. Short-term moving average, resistance. Inevitably, it's going to come right back down. And with that downtrend coming, or that short-term moving average coming down, and this down gap still remaining open, and that could still mean that lower high, and then this thing coming down to maybe even retest that up gap. You see what I'm saying? That's why I'm proposing for the buyers, if you really want to see some dramatic turnaround and smooth transition back to the all-time highs, that significant gap up is required at this point. But benefit of the doubt goes to the sellers as of today with these two down gaps, short-term moving average and mid-term moving average. They're all kind of favoring the bears at this point. Right now, only weapon bulls are kind of working with in the short term is this up gap. That up gap has been protected here. You can see, so there's a buyers in this vicinity protecting this level. You might wonder, how come we didn't see the price coming all the way back down and retest that gap area today? We kind of stopped short in the middle of it and just bounced right back. Oh, well, my long-term moving average is right there, right? So that's why we came down, retest, and got right back up instead of coming all the way to retest the gap area. And this gap, they were just up gap right here, 449 gap. That gap has been opened up. Actually, I don't know why this gap is right here. Right there. That 449 gap is opened up. It was first opened up on October 19th. It's opened up for 2 months here. So bulls, bears, I mean, you really need to come down here and fill this gap too and kill that momentum right here. Right? Because if that gap stays open and this thing turns into some sort of a consolidation, because I think I talked about this extensively and intensely on Friday, talking about the double top, the scary double top threat from the bears. Go and check that out, that video on Friday. So you're a bear here. You really want that double top to be materialized? Well, you gotta come down and fill this gap, break below the neckline, and then continue to call. And there's another down gap though, right here. So you can see they got quite a bit of supports here. Bulls are working with, but again, there's down gaps also. Let's check out the oscillator and see if we can extract any more information here. So the oscillator is not at extreme oversold yet. I tweeted it out earlier today, or about an hour ago or so, in my Twitter account at 2K Kim and Stock Twits, that extreme oversold level in the past 5 months, it's been right here. Where's my circle? Right here and right here. And we haven't hit it yet, right? And that signifies a couple things. First of all, we're not extremely oversold. What that means is bears are not fully super tired, right? Bears got a little bit of energy left. So if they choose to use that energy, they could bring it down and fill this gap. So we're not extremely oversold. Bears are not super tired. They're tired, but they're not super tired, so they can bring it down. So that's what it signifies. And if that oscillator comes down, hit that extreme oversold level, there will be a oversold bounce similar to this and similar to that. So, and that's going to be the level after hitting that 448 support, the gap support area, right? If we don't see this oscillator coming all the way down, because that's what bears want to do, actually, bring it all the way down, actually. If they want to kind of transition this into maybe something more, let's say if this thing doesn't come all the way down, we kind of bounces back up here, then we could potentially be vulnerable here for the bears, where, they don't bring it all the way down, then they're kind of agreeing that potentially that could be that higher low, right? that's slightly higher than this low, right? And we may continue in that uptrend development in the short to midterm there. So I covered a lot because I'm trying to, you know what I'm saying, trying to equip you guys going into tomorrow what needs to happen, because I gotta address for both bulls and bears at this point of time. So that gap, obviously, the bulls, that's gonna make things hectic unless, again, that one thing, right? That one crucial thing, gapping it over, turn it into an island bottom. That will be the best case scenario. Bears obviously wanna kind of, protect it and go after this gap and fill that down gap. So we have clear objective for both bulls and bears going into this week. I'm gonna come back for you. We will reassess the situation. Enjoy your evening. Good luck trading tomorrow.